Good morning, everyone. It's 𝗪𝗡𝗃 here. Today, we're talking about why I'm sticking with my variable rate mortgage and what you should do, as well as what options you have with the current rate announcement. And we're going to be reacting to some of the news articles out there today. Really excited to be here. Thank you for joining me for episode 97, everybody. It's been a great year running this show here on Canadian Mortgage Weekly Live, Canada's only weekly video and mortgage news podcast for clients and homeowners today. So make sure you leave your comments and questions below. And thank you for joining me. So today, what's going on? We have all the rate announcements that happened yesterday. I did a live announcement online. It was great to have that. We had a lot of folks join me for that video. And today we're going to be looking at some of the news that's coming out of the news outlets today. So bank has hiked the rate to their overnight rate to 3.25%. That's quite an increase compared to where we were at the start of the pandemic when the Bank of Canada lowered all the rates. We had the Bank of Canada originally lower rates to 0.25. So with their overnight lending rate being at 3.25%, prime rate has definitely jumped. So here's some of the things that's happening with the rate announcement and why the Bank of Canada has increased rates. Well, Canadians think that inflation is out of control. I know that right now inflation has gone up quite considerably. It's been going up every month of this year, but we did see a slight decrease in the amount of inflation in August. So it seems like these rate hikes are working slightly. However, I think there's going to be inflation that continues on into the future. It's going to be something that we're going to be seeing probably for the next little while. But with these rate hikes, I know a lot of Canadians that have variable rate mortgages with a variable payment, they're going to be feeling this quite a lot here with what's happening with their mortgages. I know I'm in a variable rate mortgage. So with that, I'm going to see my own personal payments go up on that mortgage. And because of that, I'll be paying a higher amount of interest on that mortgage. So if you're like me, you're going to be experiencing the same thing. I know the bank's going to send me a letter and the bank's going to say what my payments were and what my payments are going to be now. Now, here's why I'm sticking with variable rate mortgages. Even though I have these payments going up right now, I know it's not sustainable for a lot of Canadians. And because it's not sustainable for a lot of Canadians, it's not like this is going to stick around for the long term. I don't know how long it's going to be, but the thing is, with a variable rate mortgage, you have a lot of advantages. One of those advantages is you can cancel your mortgage and move it to another lender with the lowest penalty out there. I know by having a mortgage that is a variable rate mortgage, you can refinance or you can switch your mortgage to another lender at a lower rate for 3 months interest penalty. I know there's some variable rate mortgages that people have taken out that have a specific penalty because it was a budget mortgage or a no frills type mortgage. So you're going to have to talk to your mortgage professional or myself. You can call me, schedule a call, or make sure you talk to your mortgage professional to make sure that your mortgage has that 3 months interest penalty. But that's all it takes. And usually that's a very low amount compared to a fixed rate mortgage. Because if you ever want to make a change on a fixed rate mortgage, it's a humongous penalty. It's an interest rate differential, and it really locks you in. So by changing your mortgage, being able to refinance or switch mortgages to a different company, you really leave yourself a lot more options by having a variable rate, even though these payments keep going up. Another option you have as a variable rate mortgage holder, even though payments are going up, is once this storm is over and the inflation is brought back down to Bank of Canada's target rate of 2%, you're going to see those rates come back down. And when rates come back down, you're going to see your payments drop again. And then what are you going to do? You're going to be looking at everyone that locked into those 5-year fixed rate mortgages that right now are hovering around 4 and 5 and sometimes 6%. And you're going to be at a lower rate than them. So it's a short-term pain for long-term gain. I know that by doing that, by staying in a variable rate mortgage, you're actually keeping your options open for the future and keeping your options open. So if rates come back down, you are able to take advantage of that without doing any major change. It's automatic and you're able to take advantage of those rate changes and rate decreases, and then your payment's going back down. I know that CIBC released an article just a few months ago, actually a few weeks ago, saying that September would be the last rate increase for this year, and that they were predicting a 75 basis point increase for this year. Now, that's what happened. So if CIBC is right, that means that we're going to see the rates no longer going up. I know the next meeting is in October. So with that, it's a really good place to be if you're a variable rate mortgage holder, because you're not going to be subject to any more payments. That's always a potential, but not subject to any more future increases. And then once this storm passes, we'll see the rates come back down. I was watching another professional in my industry talk about when we should expect rates to come back down. Well, the first things that are affected with a mortgage, with payments going up, are the mortgage holders, right? They have now less money to spend on their discretionary items such as Starbucks and cigarettes and whatever you like to buy. Maybe you like to go out for dinner a lot. So you have a little bit less money to spend there. So the first people that are affected are the mortgage holders. Second people that are affected are the businesses. So businesses will start to get less sales, right? And because they'll get less sales, they'll have to report less profit. And if businesses report less profit, they'll have to then cut staff. And then once they cut staff, then they'll have larger unemployment. And when we have higher unemployment in Canada, that's when Bank of Canada starts to reduce rates. So it's when the unemployment level starts to go up, we'll probably see those rates come back down. So I'm looking forward to that point in time. However, at the time being, the rates are at a higher amount right now, and that's why my payments are going to be going up. And with that, I'm prepared for that, and I am going to be staying in a variable rate mortgage just because it gives me that flexibility to take advantage of the rates going back down in the future, rather than locking in now at these high levels and then having to break that mortgage down the road at a higher penalty where I otherwise wouldn't want to. So let's take a look today. What else is happening? Because inflation is out of control, that's why the rates have been going up. The rate of inflation had decreased, though, in August. So I'm hoping that in September, when we get those numbers out, that inflation continues to be reported at a lower amount. It's still happening. I'm not saying it's not happening. It's still at a very high level, but the level of which inflation is happening is going down. We're not going to expect prices to go lower. That's the thing, though. For prices to go lower, that would mean deflation, and we won't see deflation in Canada. The government wants to continue to have inflation, but at 2%. So if we're all expecting prices to come back down, that's not what the government's looking for. They're just looking to decrease the speed of which prices are going up from the current, I think it's 7.6%, down to 2%. And in July, it was 8.1%. So what's happening now that the price of mortgages is going up? Well, I'm seeing a lot of clients turn to credit unions for mortgages. And that's because with credit unions, and as a mortgage broker, I have access to both banks and credit unions. But as for credit unions, they are regulated under a different model by the Government of Canada. And they can actually qualify for folks at a higher amount of mortgage. So a lot of these folks, they can't qualify through the banks as they used to because the qualifying rate is so high. But with the credit unions, you actually don't qualify at the qualifying rate. You qualify at the contract rate. So instead of this stress test that all the banks have to qualify you at, you can actually qualify at the rate you're getting. So it gives you the opportunity to afford a little bit of a larger mortgage. And for a lot of people, that is key right now, because if they want to move their mortgage from one lender to another, they have to requalify. So they can't requalify at the banks they used to be at because the stress test rate has gone up so high. For example, if you want a 5-year fixed mortgage right now and you want to move to a different bank, you're going to have to get a rate of around 5%, for example, but then qualifying at +2. So that's 7%. Imagine qualifying last year, you'd be qualifying at the qualifying rate, which was 5%. I think 5.14. Don't quote me on that. But now you're qualifying at 7% or higher. So you're not qualifying for as much money. So it's really difficult to switch your mortgage. And that's why more Canadians are turning to credit unions. So if you're looking to get a higher amount of mortgage, please contact me. I can set you up with a mortgage through a credit union and get you a good rate for that mortgage. So another thing, I'm seeing news articles come out today as a reaction to this rate announcement is that a lot of Canadians are set to have their payments go up. I just talked about that a little bit, but as rates go up, payments will go up. So as mentioned, the bank will send you a letter stating, this is what your mortgage payment used to be at the rate that it was at. And now your mortgage payment will go up to this rate with the payment going up to this amount. So with that, we should expect payments to go up for variable rate mortgages that aren't static payment variables. Now, for everyone that's in a variable rate mortgage with a static payment, I know a lot of those clients took out those mortgages at the beginning of the pandemic. And when the beginning of the pandemic hit, we saw mortgages at all-time lows. And variable rate mortgages were being sold at 1.5, 1.75%. That's amazing, right? But now the variable rates has gone up so much, and they're reporting that 750,000 of these Canadians are going to be hitting their trigger rate this fall because of this increase. So what does that mean if you're hitting your trigger rate? When you're hitting your trigger rate, that means that as the prime rate has gone up, which right now it's at 5.45%, more of your payment has been allocated to interest. And as the payment has gone, as those interest rates have gone up, less of your payment has been allocated to principal. And because of that, we're seeing that your payment has remained static, that once that interest amount exceeds your current static payment, that will be your trigger point. So 750,000 Canadians are going to be affected by this announcement that happened yesterday, and they will have their financial institution reaching out to them with 3 options. So those 3 options are going to be either lock into a fixed rate, which is going to be something that you may consider, and it may be good for you, but keep in mind, fixed rates come with a very high penalty, and the banks actually make more off a fixed rate mortgage than on a variable rate mortgage. So with that, you're going to eliminate any ability for you to take advantage of future rate decreases, and you're going to eliminate the possibility of being able to leave your current lender with a reasonable penalty. The other option that will be presented to you is to make a lump sum payment. And this will be to do a catch-up of the principal, because your payment now will not be able to cover the interest amount alone. So you won't be able to pay down your principal, and you'll actually be going into negative principal. So you'll have the option to do a lump sum payment, which for some folks, they cannot do. A lot of people, they do live paycheck to paycheck, and they don't really have reserves to do a lump sum payment. So if that is not an option, you also have a third option, and that will be to increase your mortgage. And from what it works out to, it's about a 10% increase on your mortgage payment, and that will eliminate the trigger for now. So if you're in a static variable rate mortgage, I know that 750,000 Canadians are going to be affected by this announcement that did happen yesterday. And because of that, you do have those 3 options. You can lock into a fixed, you can increase your payments by approximately 10%, or you can do that balloon payment. And again, not many people are going to be wanting to do the balloon payment nor the 10% increase. So they may lock into a fixed rate, but just make sure that you understand that locking into a fixed rate brings with a higher penalty when you do decide to switch your mortgage to a different lender or refinance for anything than a variable. And also with a fixed rate, you're just locking yourself in and not being able to take advantage of any future rate decreases that could happen in 2023. Now, the reason why the Bank of Canada may decrease rates in the future, as I said, it could be because of unemployment. And unemployment would happen when businesses don't have enough money coming in, and businesses won't have enough money coming in if people curb their spending, and people are going to curb their spending once their mortgages take more of their monthly cash flow. So it is a sequential thing, and this happened in 2008, 2009. Variable rate mortgages went up, people curbed their spending, businesses started laying off people, and then rates came back down. So it's never something that I've seen that lasts for more than a few years. And by taking a variable rate mortgage and sticking it through, you could actually make out ahead of anybody that has locked in during this period still. Now, with what else is happening in the market, I'm still a fan of a variable rate mortgage. I'm going to be sticking in my variable rate mortgage. I'm not locking in. So know that, as a mortgage professional, I've looked at the pros and cons of fixed versus variable, and I think that variable is a better option for myself. Now, let's take a look at some information here. I've put together a pretty decent presentation. Let me bring it up on the screen here. All right, so there we are. I'll just make sure there we are. So here's my presentation today. We're on episode 97. Can you guys believe that? Thank you very much for sticking with me for 97 episodes. I'm pumped about this. Just by being here with you guys for 97 episodes really makes me feel like you guys are watching, you guys are looking at this content. And if you find this content helpful, I would love if you share this content with anyone else that could find it helpful. Maybe your friends, maybe your family, maybe your colleagues are looking for some mortgage information with this rate increase in a variable rate mortgage. So definitely look into this and share this for anyone out there. So let me just get into my episode here. All right. So what's happening with the 5-year bond yield? So let me bring this up here for all of you. I know for the 5-year bond yield, we have had the bond yield actually max out in July, and then drop in August. And with the bond yield dropping in August, we actually saw fixed rates drop for the first time this year from August, about civic holiday, down into the end of August. And when fixed rates dropped, I did put that on my Facebook page, and I did have a bunch of clients reach out where they relocked in their pre-approvals at a lower fixed rate than where they were at in July. So with this drop in fixed rates, it also mimics what happened in 2008, 2009, when fixed rates started to drop at the tail end of when variable rates were increasing. I'm not saying the history repeats itself, but that is what's showing here. So looking at this here, I also see that because the bond yield has dropped from its peak in July, it did start to come back up in the late August, and I have not seen it exceed that high point. And when I bring up the bond yield, I'm talking about the bond yield because 5-year fixed rates closely correlate to the Canadian 5-year bond yield. So the 5-year fixed rate correlates to the 5-year bond yield. And if you're looking at 10-year fixed rates, they correlate closely to the 10-year bond yield. You can see that black line, it kept going up, and that's the average rate for the bond, and then it flatlined, and it started to come back down slightly to that 3% mark. So bond yield has been holding steady, and as of this rate announcement, it's still holding steady just above 3%. So it'll be interesting to watch this going forward. I'll make sure I report this information again next week on my next episode, and we'll see where it goes from here. Next thing is the Bank of Canada rate announcement. As you know, we had that rate announcement yesterday. We saw the Bank of Canada increase rates by 0.75%. And with that increase, we saw a lot of people in variable rate mortgages that have a adjustable payment. They're going to have their payments increase. Anyone that has had a static variable, they're going to see the amount of time it takes to pay off their loan increase. Anyone that's in a variable rate car loan or variable rate credit card, they're going to see some changes as well. And anyone that has a HELOC or home equity line of credit, you're going to see your payments go up. I know that a lot of folks who have had HELOCs have seen their payments double since the beginning of these interest rate increases. So if you're looking at your HELOC balance and your HELOC payment, and wondering, man, how am I going to make this work? It might be a good time for you to actually look at refinancing and paying off that home equity line of credit. Remember, if you do have a home equity line of credit, in your documents on your home equity line of credit, it is stated in those documents when you sign them that the bank has the opportunity to call that balance with a 30-day payment. So they can actually look at your balance and say, hey, we don't think this client's able to pay this any longer, and request and demand the funds paid in full within 30 days. HELOC's never supposed to be a vehicle where you keep a balance on it. It's supposed to be a temporary thing. So make sure you don't let that balance creep up too high where you can no longer pay it off. That happened in 2008, 2009. A lot of banks did call those HELOCs, and that put a lot of people in a very, very tight situation. So current overnight rate is at 3.25%. The rate increased 0.75% yesterday. And the next Bank of Canada announcement will be on October 26th, 2022. I'll make sure that we come in to this Bank of Canada announcement with the same pre-rate show that we do here on Canadian Mortgage Weekly, along with that live announcement coming at 10 in the morning. We had that announcement yesterday come through right at 10 sharp, so that was pretty great. And thanks for all of you that were joining in yesterday. I saw that was a lot of viewers, the highest viewers we had for any announcement of us here on Canadian Mortgage Weekly. So looking forward to that. Now looking at the national house price. Here we have the national house price in Canada. It has been dropping since its peak in February 2022. Now, TD did come out with an article talking about the average national house price. The article was talking about how TD is expecting prices to drop from their peak by 20 to 25%. Now, looking at where we're at as of this data, which is as of last month, so it's not current data. Looking at from the peak, we've actually seen house prices drop nationally on average 23.8%. So have we hit that bottom yet? I'm not sure, because I'm not a real estate agent. However, looking at these prices and looking at that article from TD, it's almost as if TD is saying that they're not expecting this drop to happen until January minimum 2023, but I'm seeing it happen now. So there's a little bit of a disconnect here. Perhaps we're going to see prices rebound slightly and then drop again further in 2023. I'm not sure. What you want to do is have a conversation with your local real estate agent. And if you don't have one, please contact me. I work with realtors all over Ontario. So in every major market, I can connect you with a real estate agent in your market that can give you specific home data and what's happening in your local market to be able to get that. But with this, even though we've seen the house price nationally drop so much in the last few months, because mortgage rates have gone up, it's not like the payments are any cheaper. So as these house prices are dropping, the banks are making their cut on the payments. The interest is going up and the payments are staying the same. So it's not like waiting for the house prices to drop is going to get you a better payment so long as you need a mortgage. So make sure you connect with your local real estate agent. And I'll make sure to update this graph next time. I think we're going to have the prices, national house price, up here for the most recent month, either next week or the week after. So join me next week at 11:30, where we look at what the average national house price is at that point. So that's my presentation for today. If you have any questions, I would love to hear your questions in the chat here, or if you have any mortgage advice that you need, I'd love to take a look at your specific mortgage situation and give you an idea of what you should be doing with your mortgage, because everyone's different. Everyone has a different plan. Everyone has a different long-term goal. Maybe you're not looking at staying in the house for the long term. Maybe this is a long-term thing, but let's take a look at the chat here. All right, so what's going to happen to static variable mortgage payments? All right, so for static variable mortgage payments, thanks to everyone for the great comments as well. If you have a static variable mortgage payment, you might be hitting your trigger rate as of this rate announcement that happened yesterday. I know that there's 750,000 Canadians that will be hitting their trigger rate because of this rate announcement. So make sure that you watch out for your lender to get in touch with you about that. I know there's certain lenders that do offer these static variables. And if you want to be proactive about it, reach out to me and I can get you a mortgage that either is a non-static variable, or if you're looking to lock in, we can lock you into a fixed rate. However, do make sure that you understand that locking into a fixed rate does put you at a situation where you're going to have less flexibility down the road because the payments are going to be higher and the penalty will be higher. And to get out of that mortgage, it's going to be harder. Now, join me next week on my next episode, episode 98. I'll be going over some of my personal, what's happening with me and what's happening with me in this month. So next week, I'll be doing a special episode 98, Thursday, September 15th. I still can't believe that we have done 97 episodes now, and I really appreciate all your viewership. Make sure that if you have any questions after the show and you're watching this is going to be on YouTube, it's going to be on Facebook, it's going to be on Twitter and Instagram. Make sure you reach out to me by clicking the appointment link below and scheduling an appointment with me so we can talk about your mortgage situation. I do appointments over Zoom, I do appointments over WhatsApp, or we can do a texting appointment, or we can do a phone call appointment. Whatever you need, we can get started that way. I also do in-person appointments again. We can also take a look at your mortgage, make sure everything is good there, look at your plans, and make sure that you're on track with your mortgage goals. Perhaps your mortgage payments have gone up so high right now that you really can't stand paying that much mortgage. Well, there's actually options available to you. If you're looking to lower your mortgage payments, we can look at extending your amortization further and lowering those mortgage payments to give you some more cash flow. Perhaps that's what you want to do. We can look at some of those illustrations for you. Again, if you have any family or friends that could benefit from this information, make sure you share my video and get this out to them. Make sure you like, comment, and share, and follow for the next video. We'll see you next week on Thursday, September 15th at 11:30 a.m. And until then, thanks for watching. My name is 𝗪𝗚. I'm a mortgage broker servicing Orillia, Barrie, and all of Ontario and all the major markets in between. And we'll talk to you then.